Welcome, and thank you for joining us today for a discussion on account transfers, issues, and opportunity with Delta Data. I'm Helen Sullivan, Senior Vice President, ABA, and Delta Data is a new ABA Associate Member. I'm joined here today with Whitfield Athey, CEO of Delta Data. He's an innovative thought leader on middle and back office technology with 20 years experience as a technologist in the pooled investment industry. We're also joined by Mike Sullivan, Senior Vice President at Northern Trust. Mike is the head of Correspondent Trust Services, and his team offers comprehensive custody technology and asset management services to community banks. Welcome, gentlemen. Today, our discussion is going to center around automation, transparency, and efficiency in the bank trust transfer market. There's been a lot of changes and a lot of pressures recently. And Mike, well, let's start off with you. You work with many community banks in this area, so let's gain your perspective.
Yes. So at Northern Trust, one of the services that we provide is to act as a correspondent for the local community banks and trust companies, who I'm sure many are listening today. And what we actually offer to them is full connection to the depository, the ability to settle their trades, collect their income, process their corporate actions, and of course, transfer assets into and out of the bank. And more, we've seen clients that as they're gaining new clients on their side, wanting to have an efficient way to transfer assets into their account, a quick way to transfer assets into the account, and a way that is more in line to what the new generation of investors is looking at. So from there, from a technology perspective, Northern Trust as well on our wealth management side leverages the ACAT service. But where we're working with is the end community bank and trust company that don't have direct connection to the depository as well.
Thanks, Mike, for that introduction. And I think what Delta Data is bringing to the table today is our perspective across multiple clients and prospects in the bank trust industry. We also see the end beneficiary request for transfers as well as the institutional correspondent transfers that Mike was covering. We do work for both bank trust service providers like Northern as well as for direct banks who deal directly with the DTCC and or their custodians. So we're looking for today to talk about these increased demands coming from the consumers, whether they be institutional trust clients or end beneficiaries. The demand for lower risk and lower market exposure and more efficiency around the trust transfer processing so that it delivers a better end client experience.
So I think that if we look at the current state of the industry and we're talking about the clients that we're working with directly, a lot of what they're doing now is they want to set it and forget it type situation where they can work with their new trust department, let them know who their prior trust department is, and then have the ability to have that transfer occur from beginning to end, which includes assets depositing on record, assets having costs attached, and then assets being invested in a way to help grow their trust and their wealth management. Part of where we look at, and I think what Whitfield's looking to do is to help enhance that connection.
Yeah, Mike, I think that hits it right on the head. At the end of the day, this industry mainly moves and responds to client demands, and the expectations are growing on, in your description, the institutional set it and forget it. We've changed servicing partners. We're moving assets. The expectations is it's seamless, it's integrated, it's transparent. And the reality is that this little neck of the woods has not really been touched in the last 20 years, the same way many of the other processes that both servicing firms and direct bank trusts are accustomed to. And I think when we look at this current state of the industry, we're having to balance this increased expectation, whether it be an institutional client, you sold me on moving from one servicing provider to another. I'm expecting this great service, and then out of the gate, the transfers, lacking transparency causes an issue. But you got that same issue on the bank trust side. You're moving a client, you sold them on moving to your trust platform, and the first experience they have is really not putting the bank's best foot forward from an operational processing environment. It's not that it doesn't work, it's just there's far better operational execution within the shop than putting transfers out front. But that's what we're stuck with, because the transfer in is one of the very first touch points in. So you have these increased expectations out there, and it's balanced against a very complex problem to solve. And there are technical reasons that it's complex around the data that has to be shared and the very tight time windows that data has to be communicated between the banks that are corresponding and the DTCC and the asset managers. But it's really that star diagram that's adding the complexity. Most bank trusts have servicing relationships such as yours. They have sometimes multiple custodians for their stocks, bonds, and funds. And then they also have limited understanding of the DTCC's ACAT process. And then to compound this whole situation, both the sending and the receiving bank must have a process in place to use ACATs, and it must have already solved for a lot of these problems that either bank deals with. So that's pretty much the barrier to entry that most people have stopped at over the last 15 years, in our opinion. Can you talk a bit about how Northern has overcome that, and what do y'all see as the state of the industry, and what's next for your processes to kind of continually drive the client expectation to be met?
Yeah, well, it's interesting. I've been in Northern Trust now for 16 years, and prior to my role in Correspondent Trust Services, I worked on our institutional side. And I think this same feeling that we always had to sell clients on the institutional side, partners in the wealth management trust department are having to sell their clients on. What is it going to take for me to process a transition? Because that is the biggest heartache that ever occurs for any type of transaction that occurs. And I think every single sales presentation that any client walks into now has some section that's focused on transition. And I think at Northern, what we like to say for our correspondents when they're moving their entire assets over to us is it's a set it and forget it. We'll own it from beginning to end. And I think the individual clients are looking for that as well. When the new trust officer brings in a new client, they want to know that that trust officer has a process from beginning to end that's going to facilitate that transaction regardless. And like you said, they don't really care if it's the other side's problem. As far as they're concerned, it's the receiving side that's causing the problem because they no longer have the relationship with the delivering side.
Yeah, I couldn't imagine having to sell into an industry where after the ink dries on the contract, I've got a good 30 days for the incumbent to be in my client's ear about how bad my ops are, trying to pull those assets back before they come across. So that's part why I bring that up. That's part of the pressure that I think is really driving a lot of bank trusts to say, all right, we got to get this to the same level as the other things that we do quite well, even if it means that we have to go outside of the umbrella of our services to solve this problem. And I think that's where Delta Data is adding some value by bringing the custodians to the table with the software manufacturers of the bank trust books and records, along with bringing knowledge to the table that companies like yours are sharing with us on how it's supposed to work and how it does work, to try and wire all these entities together to deliver a more repeatable experience. Because at the end of the day, we can put, as you put it, I've seen it, the disclaimer, this could take up to 3 weeks, but everybody'd love to get rid of that bullet point out of the sales deck.
Right, 100%.
So Woodfield, you spoke a little bit about some of the barriers. Can you go into a little bit more in depth on what some of the barriers in the past have been to adopting automated processes like this?
Sure. So the DTCC and an ICI working group who devised the ACAT system almost 2 decades ago did a great job building a robust transfer management system. And by one way or another, the broker-dealer community has really taken off with their usage, and it's quite seamless on the broker-dealer platforms. And the bank trust had a few growing pains with the system, and it never really caught on. And what we determined through, analysis of the market and the problems that we have to solve to deliver this capability to our clients, is first and foremost, bank trusts don't have a huge supermarket of mutual fund relationships. Companies like Northern Trust are very in a very good position because of the breadth of mutual fund relationships they have to support for a servicing book of business. But if you're a singular bank trust, you're not going to have 250 fund complexes, agreements with them. And that makes analysis of whether or not the assets in flight are applicable for your platform. That's one complexity you have to ascertain. The second is whether or not you can hold the assets on the platform. I remember some of these ACATs will come in and they'll have 200 or 300 positions in them, and you have to look through and determine the eligibility. Sure, it's easy enough to say, yeah, all these stocks we can hold, all these bonds we can hold. Then you get into complex funds, especially if you get into not your everyday mutual funds that you haven't heard of, and requires a lot of research to determine the eligibility based on the trust rules of that bank. And then the third piece is you have a very tight window for receiving that information, verifying it, and confirming you're going to take it. So those three things, the timing window and whether or not you can hold the assets on your platform, and then that last piece, do I have a relationship with the fund, because that's required under the 40 Act to have a relationship with the fund to hold their assets on your book. Those three are pretty strong barriers to entry just within the bank trust shop, and that's just to receive. The fourth is a little stickier. To participate in ACATs, you must deliver as well as receive. So as much fun as it would be to just say, yeah, we'll take the assets and figure it out later, a lot of companies using ACATs do uphold that fourth rule, or that fourth point I was talking about. And if you don't deliver assets via ACATs, they're not going to send them to you. So you have to solve those complexity issues for both inbound and outbound transfers to participate. Now, we're talking about ACATs here, but really all transfers share the same complexity. And that is, you're dealing with a counterparty outside of your four walls, and you're dealing with multiple servicing partners like custodians and companies like Northern Trust who are servicing on behalf of these bank trusts. So if you get enough large firms into a single model that you have to maintain and produce a repeatable process within, it's actually quite daunting. And that's why the majority of bank trust transfers are fully manual today. And it takes coordination of all of those entities, plus understanding of the technical complexities to solve this problem. But for large companies like Northern, who are at scale, who have to do this hundreds of times a day, they have tackled it. Mike, would you like to, add a little bit about how y'all have seen these issues, how you've been tackling the current state within these confinements we're working within?
Yeah. I can speak to it more specifically from the institutional side, and what we offer. Our wealth management arm is, of course, using the ACAT service for the assets transferred in, like Whitfield had mentioned. But one of the things that we've been really working on with our client base is how to get them the cost basis information in a way that's quick and that it's applicable and can be loaded into their system. So Northern is, of course, a CBREIS participant. We're receiving that cost basis information. Historically, for example, we talk about being able to transmit it, that we receive the data and convert it into a format that's able to be loaded to our trust system. Once that data is converted, it might not necessarily be applicable and be able to use by the trust systems that are being used by our correspondents. So what we've done is that we've worked with the way in order to convert that data back into a format that's eligible to be uploaded into the system, which we think is important for our end client, in order to get the cost basis up so that the client can end up getting into the market and getting trades done. Excuse me. The other thing that we've worked on as well is that we've worked to make sure that we've been leveraging, in this unique business. If we sit on the institutional side, a lot of our institutional business doesn't leverage the ACAT process. We realize that on our side that our clients are looking for the ACAT service and to be ACAT eligible and sell that to their clients when they're looking to transition. So we leverage our internal wealth management partners to help support us in the effort to support our clients. One of the things Whitfield you said earlier was about the transitions. And, I came from a world on the institutional side where you're dealing with the bigger corporations, the State Streets, the JP Morgans, the Boney Mellons, the Northern Trust. And we always say, we interact with each other very well because you never want to feel like you're being left on a sour note. And I think that for some of the bank trust companies that we work with, they're taking business from the Fidelities and the Pershings and the everybody else, and they're not necessarily getting that same working together that they necessarily need to make their transition easier because they feel like this small bank trust company doesn't really hold any weight. And I think that tends to be a struggle with our clients as well as when they're taking those businesses from those bigger areas as well.
Yeah, Mike, I think you hit on a lot of key points there. Yes, this problem not only is solvable, but has been solved. And that if you have the resources that Northern Trust has and the demand, you're doing this as a servicing business on behalf of others, as well as having internal demand from your wealth management arm, this problem can be solved. It's a lot of data transformation work. It's a lot of data routing work, and it is a coordinated dance, if you will. It's a choreographed dance from the moment you receive it, analyzing the assets, confirming receipt, ripping out what you can't take, and getting that communication back to a partner. That's a choreographed dance that your company has seen value in scripting and executing.
Yeah, well, and Whitfield, you talk about all that data exchange, and we're focused on transfer, but I think we'd be remiss to say ensuring that it's done securely as well. Transmitting data and making sure that you're sending the right data to the right person and the right counterparty is one of those things that every bank trust department is dealing with now as well. And I think that's something that we can't forget to talk about and the risk that comes with it.
Absolutely. And, we always joke around that email's unacceptable unless it's $500,000 or more to fix the problem. Then, just send it via email for now, right?
Securely with the password attached.
Right, because that can't get hacked. We agree that it is, the main thing is we figured out it was solvable at Delta Data. Clients like ours have solved this problem. And when we took a look, we were like, wow, that's some serious choreography, data transformation, data load. And then you also have, as you pointed out, the Seabreeze information. So you have different data sets coming at different times. So you have a set of activity trades, if you will, transfer execution instructions. They have different settlement timeframes sometimes. They have different documentation requirements. Certain funds require transfer documentation, others don't. Certain funds don't participate. One of the well-known banks in New York, their asset management unit just says, we don't do it. 45 days, good luck. See you in 44. And you have to keep all that kind of that business logic baked into the system that you compile. And again, that's how we got in the business, is we recognized our clients could do it, but they've come to us and said, man, this is incredibly complicated, expensive to maintain. Is there something that Delta Data can do that's more industry leverageable? And what I mean by that is share the cost across multiple folks trying to find the same functionality. But I thought also it was important where you were talking about how your correspondents want to leverage that capability. So for servicing firms, you have that last level of complexity whereby you're doing this on behalf of others. And you're having to translate those instructions and set expectations and provide transparency on top of a very complicated process that could fall apart if any one of the different partners is unable to deliver, unable to hold, or unable to send confirms.
And Whitfield, if we can just go back to something that you touched on as well about on the previous slide about the need for transparency. Can you both speak about your different perspectives on how this market push for additional transparency and how all of this data and automation plays into that?
Sure. I'll start, and Mike, I think you're doing it every day in the institutional business can provide even better perspective. But what we are seeing in the direct bank trust area, and what I mean by direct is when we are working with a firm that has fiduciaries and they are doing the work, they're not leveraging the highly evolved capability set of like a Northern Trust. The new beneficiaries are, in general, just some industry information I've been given. The wealth is being transferred from the boomers and is landing on late Gen Xers into the older millennials and Gen Y. The expectations of that crew are vastly different than the folks who save the money. Many of these trust relationships are 25, 35 years old. Mm-hmm. That relationship was established in a very manual operational environment, and that was accepted. And the wealth is being transferred to this person who the last thing they were looking at on their smartphone was Travelocity and canceling an Airbnb on like 24 hours and 30 seconds notice with no penalty for a vacation home for a week. And then we come in as an industry and say, great, you're getting all this stuff. Great, you're transferring it to our bank trust. We look forward to seeing you in 3 weeks when all this stuff lands. And they're like, what? Mm-hmm. But that's the reality. And it is a pressure that is not going to go away. And just because they exposed or their expectations are hitting on an extremely complex part of our back office doesn't mean we're not going to have to fix it. We're not going to explain to a 26-year-old why it's too complex to do that in an automated and relatively fast way.
And we feel that actually underscores, I'm sorry, Mike. That actually underscores ABA's report last year. We issued the changing face of wealth management. And one of the themes from that is that we're suggesting to bank trust managers that have been servicing these aging accounts to reach out to the next generation, and totally agree. They have different expectations when it comes to technology and service levels and transparency. So I see the connection between the transparency, the data, and the automation helping them to create these relationships with the next generation.
Yeah, and I think from the transparency perspective as well, a lot of times what we see from clients is, this might be a 2 or 3 day process, or in some instances a 15 to 20 day process, and they want reporting to know where they stand. If they're receiving 200, 300, 350 assets, they don't want to look at account A and account B and try to figure out what happened. They don't want to make sure that all the trailing cash is moved from one place to another. They want reporting that's going to tell them where they stand. And that's really one of the benefits that can get offered through an ACATS to say, hey, we've received 97% of your assets. We're still waiting on another one.
And Mike, I have a follow-up question for you. With this automated technology, when you apply it, do you have case studies or examples of how that has helped to improve customer relationships at Northern Trust?
I would have to imagine that when Northern instituted the ACAT services, and I would have to imagine it was many years ago, that there is something that could probably be shared from a wealth management perspective. But I think that we can definitely also speak to it from a correspondent trust services perspective. We haven't done any white papers yet, but I think that that's something that can be very, very interesting for clients to see. I think that there's other institutions that have converted to ACATS more recently than us. And I think that there's a lot of drivers for that. I think that they were losing out on clients because they didn't have AK capabilities. And I can think of one very specifically that Delta Data has worked with, that was a driving decision that they made because they were losing business. And if you're going to lose business for something that's operationally related, that can be fixed pretty easily, that's really a driver for those decisions that look to implement the process.
So when we talk about automation in the current state, and Mike, I absolutely agree. It gets back to the why now. People are losing business. Enough large bank trust and service partners have figured out the majority of these transfers. And when I say figured them out, just to pick up on something you mentioned, y'all are uploading a file into your trust system and initiate the asset pending. once we, as a service, a technology service provider, can see it work, doesn't have to be perfectly elegant, then we can really dive into how do we get a company from no transfer capability to not touching it. Because what we really want to get folks on is an alert saying you don't have Seabreeze information on 3 accounts and we can't trade them until it's here. And that's all you heard about 40 transfers, right? Is 3 accounts that the certain specific assets we haven't received Seabreeze on. And to get to that kind of holy grail of an end-to-end process supported with full automation, that's where we believe as a service provider to the industry, a technology service provider to the industry, we can afford, if you will, to invest the money to go integrate with BNY's format, integrate with Matrix's format, integrate with FIS trust systems to hopefully get to a scale of support whereby we can replicate for a smaller bank what you guys painstakingly put together as a servicing firm over the last decade.
Yeah, I mean, I'll take it even one step further. You know, we talk about putting it in the hands of the individual, which we've been saying from the beginning. I think a lot of servicing firms want to get out of the idea of manually touching every single transaction. So if they can put it in the hands of the individual, and we know the younger generation's willing to do it on their own, that risk is off my plate. And now if something happens where an instruction happened incorrectly and they put it into the ACAT system wrong, Northern's hands or any institution's hands can, you know, legally, right? I think relationship-based might be a little bit differently, but you're putting the risk back to the end owner. And I think that's a big push right now in the banking industry as well.
Yeah, Mike, I think that's an important thing that weaves into all of these themes that we're seeing. The expectation of great client support of the current, when I say the generation that's 30 and younger is don't call me, just make it work. Like yesterday. And the go-to way of being a high service, high touch environment just 10 years ago was have somebody smart who understands our back end processes, call them and figure this out. That's the last thing the current generation wants, right? Yeah. That's our playbook. So what we have to do is we have to invest in the technology whereby just 10 years ago, I literally was talking to somebody, he's like, why in the world would I ever want to automate transfers? I'm like, okay, I hope your retirement package is in line because I don't see how you're relevant.
Well, yeah, I can't believe I have to go to the bank to actually deposit a check that my parents wrote me that for my birthday. I have to actually go into the institution to deposit it. And I think that's, you know, these things and these ideas, you know, physical securities and all these things that I think the new generation is going to have no clue what these even are. And it's one of those things. For sure. I
agree. My grandmother, who unfortunately just passed, but she wrote me a check for my birthday too. And it was, I loathed seeing that $42 check. I was like, thanks for reminding me I'm 42, but gosh, I got to go to a bank. Oh no. Right? Can I just give you the $42 back?
So if I'm a bank online listening to this, and I think you guys did a great job of outlining the need and the benefits, what's the first step? What's the first thing they should do to try to understand how this automation and this technology can help the current business that they have, and then, you know, assess how to bring it in-house at their trust area?
So I'll talk from the small community bank trust side, and I think Whitfield will probably talk to more of the side of the bigger institutions. But, you know, I think the first step is you need to see whether or not your service provider that you're using has the ability to facilitate ACATs. You know, if you're using certain custodians, they might not be able to facilitate that transaction, and maybe you have to reach out to your trust accounting provider or whoever it is to provide you with who their partners are that may be able to meet this need. I think that it'd be interesting as well as you probably want to look at to see where a lot of your transfers are coming from. You know, if you're earning a lot of business because these community banks are ingrained in the community and it's a XYZ firm down the street and that's where you're winning a lot of business and they don't have ACAT capability, like we talked about earlier, the idea or the point may be moot because both sides need to be looking at it. So I think those are two things when you talk to the smaller community banks and trust companies that aren't connected or aren't direct to the depository that they should really look at to see whether or not they're able to facilitate that.
Thank you.
I think those are great points, Mike. And for the larger trusts that are doing it on their own that can't rely on a great service partner like Northern, I think it's worth revisiting. Probably most of these banks haven't revisited it in 2 or 3 years, because when you look at it, it's quite daunting. And if any one of these partners, your custodial partners or the DTCC's eligibility requirements, if anything is not copacetic, it's very hard to architect a solution. And when I said, hey, I think they should revisit, there are firms such as Delta Data who have tackled the problems that have caused this to be too high barrier to entry in the past. And we have solutions today that have solved those problems and can deliver this process in a very efficient manner, so that the bank is more on the forward leaning edge of capabilities, not on the back end waiting, if you will, for some panacea of capabilities to come that's just not going to. ACATS works very well for the broker dealers, and that's actually a bit of an issue for bank trusts. They're not going to change it significantly. It's processing millions of transfers a day for the broker dealers, and I just don't see, and I don't believe at all that this is a fault by either the advisory group that's building it or the DTCC. They're capturing the vast majority of transfers that are out there, and they're doing it very well in a highly efficient environment. But I don't think that if I was in a bank trust shoes, I'd wait for version 3 to just solve all these problems for bank trusts. I don't see it coming. But there are firms such as Delta Data and others that have said, hey, this is something that's got to be solved. Companies like Northern have illustrated it can be solved, and we've put the right connective tissue between these major service providers, together with a lot of industry knowledge baked into our tools, to brute force it to work in a full straight through processing environment.
We've had a few questions come in. Mike, let's start with you. What are some of the common pain points and struggles when transferring or trying to move cost bases in a free receive and free delivery process?
Yeah, and I think I hit on a couple of these earlier, but I think one of the primary ones is specifically around delays of the delivery of the cost basis. Different firms, depending on how they're delivering the information, don't have to necessarily meet specific deadlines. I think that there are even firms out there that, instead of delivering it electronically, are actually sending it via physical mail to the successor institution. And when it's physical mail, that means it's got to be input manually, and that presents its own set of risks as we're looking at it. So I think that really is one of the bigger struggles, is making sure that the cost basis is received timely, so that the trust officer is able to trade it as quickly as possible and make sure that their client is in the market.
Okay, thank you for that. Whitfield, we have another question here. I think this one is for you. What are the best practices and procedures used to combat sort of the delivery of shares in a free delivery?
So the process and procedures to keep them from being dropped is to account for all of them in a database. And it actually gets back into what Mike was just saying about Seabreeze. One of the harder parts about cost basis is it arrives at a different time that it is not always consistent with the timing that it arrives. It could arrive via mail, it could arrive same day as the transfer, it could arrive the next day. So we have a similar issue with the assets. For each inbound asset or each outbound asset, you need to account for the position, and you need to account for the likely timing. And then you have to come back and look each cycle and see, did it arrive as expected or did it depart as expected? And then you have to keep that list of assets that have either left the firm and you need to deliver cost basis for, or are coming back into the firm and you need to receive cost basis. You have to keep that queue with an expectation based on your counterparty handy, if you will, to make sure that you're tying it out. And the reality is on both fronts, are you accounting for all of the assets that are inbound, and are you tied out to all of the cost basis information? you turn into the likely scenarios you're doing a manual reconcile daily on all positions received. And that's just from a time perspective, a tragic place to be. So what using technology will allow is for any position coming in or leaving, you can put workflow around it and ensure not only did you receive all the positions you were expecting or deliver out everything you were expecting to deliver, but did you also then receive the cost basis and or deliver the cost basis to make sure it ties out and all of those separate workflows, ACATable assets out, non-ACATable assets out, cost basis out, is all tied together.
Thank you, Whitfield. We have a few more questions here. I think we should just go ahead and answer them. Mike, I'm going to direct this one towards you. How has the COVID pandemic situation created challenges with so many staffers working from home, and how has that affected the transfer process?
Yeah, I'll speak. I think one of the immediate concerns that happened is a lot of people aren't able to sign documents, right? Everybody's working from home. They might not have access to a printer. They might not have access to a scanner. How do you get the proper direction that's needed in order to effect a transfer? And these situations, I think, open the banks up for a prime opportunity for hackers and risk. So as soon as the pandemic happened, I can tell you that Northern Trust was immediately, all of our client service being partners, reminded about the protocols around ensuring authorized parties and callback verification and all of the different risks that need to occur, and risk management that needs to occur. I apologize. But fortunately for our particular client base, that we offer a secure portal that's online, web-based, that allowed clients that could direct us on their transfers. So while we were able to facilitate transfers without any hiccups because of our resiliency plan, it's very possible that these other institutions who couldn't meet face-to-face, couldn't get a signature-based document, may have had delays. And I think that's where having a secure automated portal in order to facilitate transactions helps in these times of a pandemic, as everybody probably understands at this point, almost a year into it.
Yes, thank you, Mike. And Whitfield, I think this one last one here. What are some of the common practices that are used when assets are held in custody away from the firm, or perhaps in there are multiple custodians in a certain situation? Are there particular procedures or different models that are used to be able to get your arms around that?
So Helen, that just speaks to another layer of complexity. I would say as many bank trusts as we've seen that uses one custodian for everything, we see as many that use one custodian for funds and another for capital market securities. This adds a layer of complexity that, speaking to Mike and the challenges that Northern efficiently worked through in COVID, we've seen that be a bit of a tax, because in the industry, we've noticed a lot of people are wearing multiple hats during COVID, more so than when they were in the office. COVID's not only geographically disrupting things, but I don't think anybody is surprised when somebody says, hey, I'm out for 2 weeks. My wife or my husband has COVID, and you have a whole family situation, and then you're covering workload. Covering workload is not fun when there is a ton of business logic on how things work in the back office, inside the heads of the employees who, for legitimate reasons, cannot work for extended periods of time. We do see the benefits of putting that type of logic into software, whereby if you receive an account or multiple accounts, and say there's 300 or 400 positions in there, you have software that looks at the security master that's baked in and says, okay, these 125 positions are going to be custodied at BNY. These other 230 are custodied with Northern Trust. And you don't have to have, for sure, the right person who knew that operating the business process. So it adds resiliency to your business process to put that type of logic into software, whether it be homegrown software or something that you buy from us or Broadridge. In that, in COVID, it illustrated that processes we thought were very durable were actually quite brittle if certain people were not executing them. And what we need to do as an industry to reduce our operational risk, and which is going to directly lead to financial risk and reputational risk, is put a little more of that knowledge into systems whereby the employees can share the workload a little more efficiently, and not, 3 or 4 days after a transfer was supposed to arrive, realize they've been corresponding with the wrong bank. So, or the bank custody department. So those sorts of nuances just add to the myriad of complexities that our clients are asking us to solve. But it is a big issue when that information is within the heads of employees who right now, we're not nearly as stable as we were 2 years ago as far as access to specific employees on any given day.
This will conclude our program for today. If you have any follow-up questions, please feel free to reach out to myself at ABA, or Grace Din at ABA, or Kristen Banker at Delta Data. Thank you all for your time today.